Hey guys, welcome to the Silver Report. Today is Monday, March 13th, 2017. There's some major moves taking place that you should be aware of. Number one, Wall Street's finally finding the next big short is going to be in the U.S. credit market. And it's not just the personal credit market, but struggling retailers such as Macy's. They're starting to fuel mall defaults. And investors, what we're seeing, Wall Street speculators are zeroing in on the next credit crisis. It's no secret many mall complexes, they've been struggling for years. Many Americans are doing shopping online, but now they're beginning to catch the eye of hedge fund types who think some may soon buckle under their debts, much the way many homeowners did nearly a decade ago. Like the run-up to the housing crisis of 2008 that harmed so many. A small but growing group of firms are positioning to profit from the collapse that could spur a wave of defaults. Their target? Securities backed not by subprime mortgages, but by loans taken out by beleaguered mall and shopping center operators. With bad news continuing to pile and pile for anchor chains like Macy's and JCPenney's, bearish bets against commercial mortgage-backed securities, they're growing. In recent weeks, firms like Alder Hill Management, an outfit started by proteges of hedge fund billionaire David Tepper, they've ramped up wagers against the bonds, which have held up far better than the shares of beaten down retailers. By one measure, short positions on two of the riskiest slices of CMBS surged to $5.3 billion last month. That's a 50% jump from a year ago. Loss severities on mall loans have been meaningfully higher than other areas. And so they see this collapse coming. And one thing to know, a lot of people say, well, I do my shopping on Amazon. Like, it's not a big deal. I do my shopping on Amazon. Retail's doing great. It's just not happening in the malls. But you are not figuring in the fact that this square footage of the mall is taxed in the counties that they're located in. It also houses thousands of employees that are no longer going to be having their jobs. During this great unemployment numbers they keep touting to you, telling you how great the U.S. economy is, the retail sector and the service sector added the highest amount of jobs. Now these people are losing their jobs. And these counties and these cities are now going to be losing this tax revenue, which once was a $100 million location, now is just an eyesore. And so there's a bubble brewing in the retail-backed mortgages. And it's getting big. It's getting big. It's not as big as the subprime home loans, but it's getting big. And the scope of the potential fallout is comparable, or worse. The bearish bets are just a tiny fraction of the $365 billion CMBS market. There's also no guarantee the positions, which can be costly to maintain, will pay off anytime soon. Many malls may continue to limp along, earning just enough from tenants to pay their loans. But as we look around America, that does not seem to be the case. As we see contracting and people at record numbers taking loans against their tax returns this year. Record levels, people using the loans to pay down their debts, as surveys have shown. So people are not planning on going out and getting that special gift they've been waiting for. They barely have enough to get by. And as we see the decreasing general public having access to funds, what we're seeing is the collapse of the sector. And investors, huge investors, are beginning to notice, and they plan to make money watching this collapse. And the question really comes down to what are we going to do? All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. We have to wake the people up to what is going on. I thank you guys all so much for stopping by. As always, stay safe.